Hey everyone, welcome. Today we're going to skip the hot stock tips. We're going to ignore all the market noise. Instead, we are focusing on something way more important, the software running inside your own head. Because, in investing, the real battle, it's not on some fancy chart. It's happening right between your ears. So let's get into it.
So let's just kick things off with a huge question. If I asked you right now to name the single biggest threat to your financial future, what would you say? A market crash, a recession maybe, some crazy economic policy? I mean, those are all really good guesses, but they're all wrong.
The single biggest threat is you. Well, to be more specific, it's your reaction to the market's totally normal, inevitable ups and downs. And this idea, it flips the entire game of investing on its head. See, it's not about you versus the market. It's always been about you versus yourself. And winning that inner game, that is everything.
So I want you to think of this explainer as your personal training manual. We're about to dive deep into the psychology of money, we're going to expose your brain's hidden traps, and then we're going to build the mental armor you need to protect your wealth from its number one enemy, yourself.
The very first choice you have to make, the first step on this whole journey, is deciding which game you're actually playing. Are you truly investing, or are you just gambling with fancier sounding words? This distinction, it is absolutely critical. Okay, let's break this down. Investing, at its core, is kind of like planting a garden. You're owning a tiny piece of a real business for the long haul, and you're doing it based on actual research. Speculating? That's the complete opposite. It's a short-term bet on which way a price will wiggle, and it's almost always fueled by hype and rumors. So yeah, less like gardening, way more like gambling.
So, how can you tell which path you're actually on? Well, this checklist right here is your guide. Ask yourself these 4 simple questions before you make any move with your money. Is your time horizon in years or days? Is your decision based on solid research or just a rumor you heard? Are you aiming for steady, long-term growth or a lottery ticket win? Trust me, your answers here, they'll tell you everything you need to know.
Now, what's so fascinating about this is where all the pressure to speculate comes from. Think about it. Your TikTok feed, your favorite Reddit forum, all those finfluencers on YouTube, they are basically non-stop speculation delivery systems. Hype and crazy bets go viral. Patient, kind of boring advice about diversification does not. Just knowing this helps you build a crucial mental filter.
All right, so you've chosen the path of the investor. Fantastic. Now, get ready, because you're about to meet the 2 main villains on this journey. They are powerful, they are primal, and they live inside every single one of us. It's time to meet fear and greed.
These 2 emotional bosses, they have a devastatingly simple attack plan. Greed and its little sidekick FOMO, the fear of missing out. It strikes when the markets are hot and everyone's getting rich. It screams at you, get in now or you'll be left behind. Which, of course, makes you buy at the very top. Then, when the market inevitably crashes, fear takes over. It screams, get out now, save what's left, which makes you panic and sell at the absolute bottom.
And this right here, this is it. This is the cardinal sin of investing. This emotional roller coaster, driven purely by fear and greed, forces us to do the exact polar opposite of what we should. We buy high and we sell low, literally destroying our own wealth in the process.
So beyond those 2 big bosses, our brains are kind of running on old software. They have these hidden glitches, what psychologists call cognitive biases, that make rational investing incredibly difficult. Let's pull back the curtain and expose these mental traps so we can learn how to avoid them.
First up, we've got herding. This is basically the lemming effect. We see a huge crowd of people piling into a meme stock, and our brain just assumes, well, they must know something. The real-time check for this glitch is to ask yourself one question. Am I buying this because of my own research or just because of social media hype? If the answer is hype, that's a giant red flag.
Next up is overconfidence. Oh, this one is so sneaky. You get lucky on a couple of trades, right? And your brain immediately mistakes that pure luck for genius-level skill. The telltale sign of this trap is when you start thinking you can't possibly lose. That's when you start taking bigger and bigger risks. Just remember, confusing luck with skill is a very fast path to zero.
And then there's familiarity bias, our brain's preference for stuff we already know. It feels safe, right? But it's a total trap. It leads to really poor diversification. Here's the quick check. Take a look at your portfolio.
Is it just a greatest hits album of popular brands you recognize? Or is it truly diversified, with things you might not know as well, like international stocks or different kinds of assets?
And finally, the big one, loss aversion. Here's the deal. Psychologically, the pain of losing $100 hurts about twice as much as the pleasure of gaining $100 feels good. It's wild. This glitch is the direct fuel for panic selling. The signal for this is that overwhelming feeling in your gut, that urge to sell just to make the emotional pain stop. That's your emotions talking, not your strategy. Okay, so we've identified the enemies, we've exposed the glitches in our programming. Now what? The thing is, we can't really rewire our brains, but what we can do is build a solid defense system. So now it's time to forge the mental armor that protects you from your worst enemy, yourself. And this armor is actually a simple 4-part system designed specifically to counteract your worst instincts. First, you need a written plan. This is your map that keeps you on course when your emotions are screaming at you to jump overboard. Second, diversification. This cushions the blows so that one bad investment doesn't wreck you. Third, automation. This literally takes your emotional hands off the steering wheel. And fourth, a long-term focus. This helps you see scary market dips as just temporary noise, not a total catastrophe.
So here's the most crucial takeaway of all. You can't stop yourself from feeling fear and greed. They're hardwired into us. But you absolutely can stop yourself from acting on them. And a solid, disciplined, automated system, that is the antidote to emotion. It forces you to make the right moves, especially when your brain is screaming at you to do the exact opposite.
And that brings us to our final thought. The ultimate question you need to ask isn't whether the market is going to go up or down. The real question is whether you have a system in place. Is your plan, your armor, strong enough to protect your portfolio from its single greatest threat? Is it strong enough to protect you from yourself?